Alright guys, we are back to it. Hope all of you had a good Christmas. Definitely pretty good, pretty relaxing on my end. But we got a trade tomorrow, so let's jump into the watch list here for the week of December 27th. And we'll start off here with a look at the S&P 500. Weekly squeeze looks good. Right? So we got our clear level of resistance, but the weekly squeeze has stacked EMAs, and I think it's shaping up pretty good here. And now finally nested inside of the weekly squeeze is a pretty good looking daily squeeze. Histogram is positive. We have positively stacked EMAs. So at this point here, look at it from this perspective. Last couple of times we've tried to break out, we're hitting that with a negative histogram. So we pull back a little bit, we kind of reload, build up energy. Now I think we're going to hit that brick wall with a full gas tank. Potentially that breaks out, triggers a squeeze, and we got a pretty good rally on our hands. But in terms of trend and structure, everything here for the S&P looks bullish. So I am looking for that squeeze to fire to the upside. Jump on here to the QQQ. Beautiful weekly squeeze. Stacked DMAs and green 10x bars. And you got the all-time highs up here right around 16,800. So good looking daily, good looking weekly chart rather. And we're making progress here as far as the quality of the daily chart. We do have stacked DMAs, and there's your two closes back above the 21. So see if the histogram can start to shift, but it's a pretty good structure. You got green 10x bars and a 2-hour chart down to a 15-minute chart. So pretty simple stuff here. Daily squeeze builds up energy inside of a really bullish weekly trend. If it fires and we can break resistance, I think you got a couple of weeks of momentum here for the Qsters. Up next is the Dow Jones. Everybody's favorite. Just crazy exciting. Give it credit though. Good looking weekly squeeze, and in terms of the daily chart, that's pretty solid. There's your two closes back above the 21, stacked DMAs and a positive histogram. And it looks like you have, let me see. Yeah, so for the Dow, you have the triple squeeze actually. Pretty interesting. Weekly. Let's check out the 3-day. Pretty good 3-day. So I think the Dow is pretty solid here. And then the small caps. One close back above the daily 21. So like I said last week, I don't think I'm going to try to get along the small caps. I probably don't do anything here. But just in terms of, as I'm trying, I'm already positioned bullish, but as I'm trying to get a little bit more exposure to the upside, in terms of the market, firing those daily squeezes and making that rally, I think if the small caps can just kind of stabilize here, you got the shift of momentum to the histogram, but if it could just start to trade at, above, or near the 21 EMA, pretty much just put an end to the bleeding. It's pretty much your ugliest spot in the market here. So if your ugliest spot can just kind of chill for a little bit, hold up on its own 2 feet, then I think your better looking indexes, in this case, the S&P, the QQQ, and the Dow Jones, then I think their daily squeezes can fire long. So the mission here, if you're bullish for the small caps, is just trade sideways for a bit. Just kind of take a breather here. But in terms of the structure of the indexes, I continue to view it as we pulled back to the 21 EMA on the weekly chart, which is right here. And typically the market's going to take maybe 2 to 3 weeks to kind of stabilize, flush out all the shorts, kind of rebuild that bullish momentum. But so long as you hold weekly support and then you print, a better looking daily chart, the trend typically continues. So that's kind of how I'm looking at this market. We pulled back to the weekly 21, and it's been, 3 or 4 weeks here. Some pretty violent back and forth, but 40,000 foot view, it's just a daily squeeze, and a lot of back and forth, but your histogram starts to shift. You're back above the 21, you get your stacked DMAs. So as long as we hold above the weekly 21, I think you give the market time, you let it rebuild the daily chart, then you look for these bad boys to fire back to the upside. So until something changes here, that's going to be my focus. My open positions right now. I'll show you those real quick, and then I'll show you the watch list. I know that's really why you're here. But we got some put credit spreads on the QQQ for January expiration. Our short puts are down here at 380. So I do want a little bit more there. We've got put credit spreads for AMD. So we'll take a look at the semiconductors in a second, but I probably want a bit more exposure in the semis. Then we've got put credit spreads on that Amazon weekly squeeze. I think one of these days here, old Amazon's going to wake back up. But we got the put credit spreads there. We got AMD, we got QQQ, and then we got some Apple. And then a little bit of Roblox. Roblox here, I would like to see this kind of get off its ass and get something going. Otherwise, I might fire it in favor of more Apple, quite frankly. But that's what I got for open positions here. For those of you that are in my mastery, we'll be live tomorrow afternoon, kind of talking about our 2022 goals, some adjustments we're making. So I'll see y'all there. But that's what I got for open positions. That's my thoughts on the indexes, with the exception of the small caps. They look pretty bullish. I'm going to put my faith in the indicators, the tools, the charts, and as of right now, they're all pretty bullish, except for the small caps. So if IWM can just trade sideways, I'm telling you, then I think the rest of the market here really gets it going. But that's my thought process right now. Let's just jump sector to sector real quick. So I don't have any interest in energy. So if the S&P rallies like crazy, then energy probably trades a little bit higher. It's not a good-looking daily chart, so can't really say I have any interest there. The financials. That's just not the best-looking daily chart. So I'm looking for edge, right? Give me the big three. And that's what my buy signal is built on, the big three. Trend, structure, momentum. There's not too much of it here on the financials. So no interest there. The industrials, I don't see too much edge there. The home builders. This is pretty solid here. Where's my buy signal? Hold on. Okay, there we go. So the home builders, here's some edge, trend, structure, and a whole bunch of momentum. So I do think if it keeps trading near the 21 here, you get a little bit more of that back and forth, it should print a brand new daily squeeze. At that point, it would trigger a buy signal. Everything else, though, pretty much checks out. Stacked DMAs on the daily and the weekly, as well as green 10x bars. So, again, just in terms of edge and structure, home builders versus the financials. I'm just going to put the faith in my indicators. No stacked DMAs, red 10x bars, no buy signal, no early buy signal. Early buy signal. So that's where I would focus. So the home builders, I think they look pretty solid here. If that can trigger a daily squeeze, I'd probably grab some ITB here. And then the semiconductors. Rock solid, right? Rock freaking solid. And you get the volatility in the market. You get the CNBC markets in turmoil. And every single day throughout all of that, SMH here is just printing buy signals. So the market breaks out. I think the semiconductors, they're going to be a pretty big part of it. Weekly and daily stacked DMAs, green 10x bars, daily squeeze. Semis continue to look really good here, guys. So Qualcomm, I keep on showing you this one. Perfect. Doesn't mean it works, but if you can, if your next 100 trades come off of a setup or a signal like this, like you're coming out on top. So Qualcomm, really good setup here. There's LRCX, another buy signal. Probably, don't chase Micron. It might not pull back, but you don't chase it here. But that looks like beast mode. Then AMD should start to print buy signals pretty soon. We need some stacked DMAs, a few other things here. And then NVIDIA, a little bit of work left as well. So those are kind of shaping up. Qualcomm, LRCX, ON. There's another one. Buy signals everywhere. So the semiconductors. Until something changes here, or until we're up here at 320, 325, going to continue to suggest make this a part of your focus. Great looking trend. Everything lining up here on the semiconductors. And then for XLK, and I show you XLK because when we tend to think of tech, we think QQQ, but we also think a little bit about XLK. Now, what's interesting about XLK is Apple and Microsoft make up like 40% of the basket here. Where with the QQQ, who's shaping up okay, not as clean as XLK, this is more Amazon. And of course, you got other things in there, but point being, you check out XLK here, kind of looks like the semiconductors, right? All that volatility in the market, buy signal every single day. So pretty much picture perfect here. Stack DMAs, all the good stuff. But this is mainly Apple, mainly Microsoft. So you could just trade the XLK, kind of cover both your bases there. And then Microsoft is starting to print early buy signals. So all pretty good looking stuff here, but then in terms of Apple, it's the king of the hill right now for tech, at least as of right now. And you've got that, it's 183 and change. So just call it 183. Apple hits 183. It's the first $3 trillion market cap ever. So maybe you get a little bit of that kind of self-fulfilling prophecy and then move up towards 183 and change. Putting that aside, the setup is here. Whole bunch of green 10x bars, early buy signal, and we took an entry here last week in the 4-hour squeeze. So I think any dip early this week, there's an opportunity to build a position in the 4-hour. Keep it simple. If the 4-hour squeeze can fire long, you're probably going to head towards 183. So that's the king of the hill for now. It's not really the setup, I think, for that 30, 45 day till expiration swing trade. You do that back here at the 21 EMA in a daily squeeze. This is more kind of continuation. And what it's really continuation of is the weekly squeeze. So this could be, this would be week number 4 that the weekly squeeze is firing to the upside. A good weekly squeeze gives us 5 to 8 plus bars of momentum. So though it's been a pretty significant move, I think old Applebee's here might have a little bit more gas in the tank. But here's what I suggest, right? Because these are good looking setups and, quite frankly, you can work a really good win rate just focusing on squeezes and 10x bars and pretty much what I focus on, I think. But the key is the risk management. The key is making sure, okay, if I can crank out a 70, 75+% win rate, I should be getting paid. In other words, how can I maximize that kind of win rate? And the key is to just try to keep your losses equal to or less than what you would win on the trade. So in the options room here, we got to at the money credit spread, call it a 1-to-1 risk-reward ratio. We're going to look to close it on a close, under the weekly AEMA. That allows us to work a really good risk-reward, where if the trade works in our favor, we're going to make more here than we're going to lose if we close under the weekly 8. So that's really the key here. But I think Apple, as long as you're holding structure here, call it a continuation play. Looking for another couple weeks potentially out of the weekly squeeze. You're looking for that 4-hour squeeze. Okay? That'll give you 5 to 8 bars of momentum, potentially. But what I'm trying to say is the beast woke up back here. You're looking for the continuation up into, let's call it 183. Just kind of sounds pretty sexy. $3 trillion market cap. That's a shitload of market capage. Okay, but you got Apple there. Apple remains the king of the hill for now. But let's go through the rest of tech. Microsoft. Solid. Early buy signals. Good looking daily squeeze. I just kind of feel like, based on principle's sake, I have to do something here with Google. Triple squeeze, right? I live for this. Weekly uptrend, weekly squeeze, stacked DMAs, green 10x bars. Nested inside of that is a bullish 3-day squeeze. Nested inside of that is a pretty good looking daily. Right? We're getting there. And nested inside of that daily chart is a 4-hour squeeze. Here's the only tough thing right now, at least for me. If you're trading Google, let me know what you're doing here. The spreads kind of suck. which to me just doesn't make too much sense, right? Big FANG stock, big Bertha, and the spreads just suck. So I got to figure out what to do here as far as how can I structure a trade. But anyways, think of Apple, right? Apple was your triple squeeze in an uptrend. Well, here's Google, same thing. Daily squeeze fires, 3-day squeeze fires, weekly fires. Eventually, you're cranking towards, I look for 3,200. 3 AR on the weekly chart. And that might seem like a pretty big move, and it is a big move. But remember, Apple was the same thing. Triple squeeze takes you into 3+ AR on the weekly chart. So I think, the setup and the trend is pretty straightforward. It's just those spreads. Little bit nasty. But I think you got a good setup. So however you want to go about attacking it, attack it. I think it looks great here. Next up is Facebook. Google's a lot cleaner. Go with Google. And then my buddy Amazon here. The sleeping giant. Potentially the sleeping giant. Weekly squeeze is still solid. It's just weekly squeezing. +1, -1, +1, -1. Amazon does tend to try to get something going into earnings. And you got earnings coming up here. February 1st, says Thinkorswim. So I got January expiration put credit spreads. I got no reason to cut them here. Weekly squeeze continues to hold structure. The 3-day squeeze, that's not misbehaving. Just would love to see a couple of closes back above the daily 21. Let's shift that histogram. Let's get the stacked DMAs. This could generate an early buy signal for me. Then I would probably add to the position. Otherwise, old Amazon here, trading sideways. All right, guys, but that's a pretty quick look there at tech. Apple and Google, or QQQ, or XLK. Just cover your bases one way or another. But the trend, the structure, the momentum, looking pretty good here for QQQ and a few of the FANGs. We took a look at the semiconductors. And then outside of this, guys, I'll show you a few scan results here. Before we do that, though, let's take a look here at Tesla. So the rumor on the street, the rumor in the hood, is Elon is done selling, just a crap load of stock here. That's the rumor, at least. I'm going to focus on structure. Now, here's what I like. What I like is the weekly chart. Stacked DMAs, green 10x bars, and the pullback here kind of makes sense. Right? Big time move, and you pulled back to your weekly 21. So I do think the bottom is in, just based on that weekly structure, but then based on the total shift of momentum here. In like 2 sessions, you went from having negative histograms and red 10x bars pretty much on every time frame to a total about face, with green 10x bars on almost all your lower time frames. All that being said, though, I need a setup. I could come in here, I could sell put credit spreads, and you can always work a trade. I need a setup. So I'm kind of just going to be patient here with Tesla. I don't got too much more to give you than that. If there was a daily squeeze, if there was a 4-hour squeeze, then I'm like, okay, we can kind of come in here and sink our teeth into this. But I think I got to wait for that. So, that next 30-minute squeeze potentially, just something of that nature. Something that offers a little bit more edge than, here goes Tesla popping, let me jump in. I need a little bit more than that. And we all know Tesla. It could roll over and puke, or it could just be up here at, 1,200 in a few days. I'll look to trade it either which way when I got me a setup to trade. But that's what I got, guys. In terms of scan results here, got a few I want to share with you. I'll go through a few of them quickly, and then show you what I'm thinking as far as potential trades on a couple of them. But first up here is Costco, and you'll see why I like it. trend, structure, Momo. Weekly and daily stacked DMAs, weekly and daily green 10x bars, and you have daily 4-hour, 2-hour, 30-minute, 15-minute, 5-minute squeezes. So she's squeezing all over the place, and in a pretty bullish trend here. What's nice about this is you don't have earnings until March 3rd. So as we're approaching earnings right now, you got to keep that in mind. Make sure at least, you're not unknowingly jumping into a trade that's going to take you right into earnings. So what I like about Costco is good looking uptrend, and you got plenty of time. One thing to take into consideration, as bullish as it is, as strong as it is, you're kind of up here at, 2 to 3 ATR on the weekly chart. It's, you're not early in the move, so to say. So I think what you could do to keep your risk reward really solid, and if you're in the options room, we'll take a look at this here tomorrow. Consider just trying to keep a tight leash around its neck. A close under your weekly 8 EMA. You can see it's kind of in support here. I think that might open the door for a move back down towards your weekly 21. So I think you're looking for 580, 590 to the upside, 2 to 3 ATR. But just take consideration to keeping a tighter leash around its neck. You could work a really, really good risk reward if you decide to jump ship here on a weekly close under that 8 EMA. So, food for thought there, but the daily squeeze looks really good. Next up is Qualcomm, which we already took a look at. Clean as a whistle. Next up here is Ford, and I'm looking to do something here. Straightforward stuff, right? Daily 4-hour, 30-minute, 15-minute, 5-minute squeeze. I look for a move into 2 to 3 ATR. Right? So, yeah, it's all pretty straightforward, right? Kind of tough for me to sit here and talk about one setup for more than a minute or so. You know why I like it. Same setup, right? Same signal, same entry, same target. 2 to 3 ATR. So, Ford is looking pretty good there. Not too much premium. What you could do, I think, you got your weekly 8 right under your daily 50, right under support. I'm sorry, your weekly 8 is a little bit higher here. But, you got support, you got your 50. I'd structure something here where you can just kind of take that ride into 22, 23 bucks. But I'd ditch the thing on a close under, 1850-ish. At that point, your daily squeeze, kind of flirt with the idea of firing to the downside. You've taken out support, you've taken out your 50, and quite frankly, this thing's just so clean. It's kind of put up or shut up time, if that makes sense. So the reward on the move into 22, 23, really regardless of how you structure a trade, should be pretty good. You jump ship under 1850-ish, the risk probably pretty well contained. So Ford continues to be the top of the scan results here. Another interesting one for you here is Dollar Tree. Stacked DMAs, green 10x bars, daily 4-hour, 2-hour, 60-minute, 30-minute, 15-minute, 5-minute squeeze. There might be squeezes on lower time frames, but it's about as low as I go. I would probably look to use that weekly 8 EMA is my stop here. Weekly close under the 8. And you got a target up there of, let's just call it 150. Right above your previous all-time high. It's got a nice attractive number there. So Dollar Tree, let's see. I want to lock in a good risk reward as I structure the trade here. But then I'll show you how to manage it even better. So, let's just say, let's go. Let me see. We'll go 135 short put. Buy the 130. We lock in about $1.80 a credit on 10 contracts. Good risk reward. You risk $3,200 to make $1,800. Now, we ain't going to lose $3,200. Because at that point, you need like a 99, not a 99% win rate. But if you're losing more than you make, so when you're wrong, if you're losing more than you make when you're right, you need like through the roof win rate to compensate for that. We're trying to make a 70-75% win rate work here, which is a great thing. It does nothing for you, that 70-75% win rate, if your losses are bigger than your winning trades. So the cost of entry here to get into the Dollar Tree Club is $3,200 to make $1,800. We're not going to lose that $3,200. At least that's the game plan here. So let's analyze the trade, shall we? Right, get the trade down here, $135, $1.80. So let's say by January 7th, right? A couple weeks into the trade, we're coming down and we got our weekly 8 here at 130. So a couple weeks into the trade, we're coming down under 130-ish. We're down about $900 on a trade where the max profit is $1,800. So that's beautiful. Risking 1 to potentially make 2. Now we're looking to take profits here and on a move into 150. So we might not sit around here to hold on for the max profit, but a move into 150 is going to pay us about $1,300. So if it hits our target to the upside, we collect $1,300 paycheck. It starts to wiggle down towards that weekly AEMA, looking like we're going to close under 130-ish. We're down about $900 to $1,000. So if we can manage a trade based on those rules and follow those rules there, we can make more than we can lose. So I think a high probability trade, but that's how you got to make the numbers work here. You lose your $3,200, and you're only putting yourself in a position to make $1,300. Well, now you got to win 3 trades in a row just to get back to break even. Now imagine you go on a 3-trade losing streak, which I can promise you that's going to happen pretty frequently. So you lose, what, $9,000? And you're out here structuring trades where maybe you can make $1,300. So now you have to hit, what, 6, 7 winning trades in a row to start getting back towards break even? See where I'm coming from here? The setup, the entry, all of that is important, but making the numbers here work in your favor, that's even more important. Because you could have the best setups and entries in the world, gotta manage your risk appropriately. That way you're making those numbers work to your benefit. So, just an example there on Dollar Tree of, I think, a good risk-reward trade. But this is what I got for you guys here on this cold, at least cold here in New England, Sunday evening. Right? I'll flip through them real quick. Costco, Qualcomm, ADP. Right? A little bit extended, so don't chase it. Go chasing waterfalls. Lam Research, Ford, XLK. And if you're in the options room, I'll post this here in the morning before I jump on the mic. KLAC, Digital Realty, HPQ. I don't know what half of this is, but I know a good looking squeeze when I see one. ON, you got VeriSign, Tractor Supply. Very solid. Stacked DMAs, Green 10X bars. There's Domino's Pizza. There is PSTG. All good looking stuff here. But most importantly is the market. So all of these pretty setups here, they got a pretty good shot of working in your favor if the market can break out and rally to the upside. The trend is there. I think the stage is set. The fun part for us is we get to sit back and watch it all unfold. But there you go, my friends. I will see you all tomorrow morning for pre-market prep at 8:45 a.m. Eastern, 7:45 a.m. Central. Until then, enjoy the rest of your Sunday, and I look forward to talking with you in the morning. Peace.